Let's start with price target. Consensus is 160. You're a bit under that at 158. Why are you less bullish than everybody else?
Well, look, the company has struggled with a couple things, right? They've got continued losses of Amazon revenue. A year ago, they faced a union contract negotiation. So there's some battles in a market that is already a depressed market. And as you know, you and I talk a lot about the state of the economy. We've been in a freight recession now for over 2 years, almost 3 years. We started the third year. So it remains a tough backdrop. I think you raised an important point, though. UPS posting flattish revenues for consensus after 6 negative quarters. You are looking for flattish revenues. That's a positive, but the backdrop is you did have the union negotiations a year ago. So UPS is battling a lot given that backdrop of a slow freight economy.
You know, Ken, I've been talking to a lot of transport investors about what they're looking for when it comes to earnings in these companies. I think across the board, you're kind of expecting revenues and volumes to be flat or slightly lower. They say the real key metric is margin. So when I'm looking at UPS, this is a stock that often trades on margin. The U.S. domestic package margin, according to Street Account, is 8.3%. That's below their target of 10%. Is 8.3%, is that good enough for this quarter? As you mentioned, there is a freight recession and also a slowdown in consumer spending that hits their e-commerce business.
Yeah, look, the company is targeting EBIT to be down about 20 to 30% in the first half year over year. It dropped 31.5% in the first quarter. That means they're expecting a 20% decline year over year in the second quarter. So look, I think that's kind of hitting what you're talking about. Without volumes, when you don't run volumes through this high fixed cost network, it does pressure your margins. That's something they're looking to take a bit of costs out, right? They've got a $1.2 billion cost cutting program. They're trying to fix that. But again, it's a struggle when in transports when you lack volumes to get that EBIT margin impact.
We talked a lot about when it came to FedEx, the impact of losing the post office air contract. UPS was obviously the beneficiary. They won the contract. Is that meaningful when it comes to this company? Because that is that volume that you mentioned that can go into this fixed asset network.
Yeah, no, that's great volume. But remember, for FedEx, it went from a profitable contract when they were getting about $1.5 billion of revenues. It dropped down to about $1.2 billion, ran at basically cost. That is the volume that UPS is winning. They claim that they're going to take about half of that, put it into their ground network, half into the air network. They believe they can run it at a better cost. This will switch over after September, so into October. It remains to be seen whether they can do that profitably. Again, there's concern over what UPS can bring on. But you're right. If you've got a fixed cost network and you're running more business over it, no doubt that becomes additive to your potential on margins. But this is at the lower end of your margin accretion, just given the type of volumes that you're moving for the post office. It really comes down to UPS needs to move some of that core freight.
Last question. Yesterday, UPS announced it made an acquisition of a Mexican express delivery company. Is that meaningful when it comes to this company? The company obviously expects to be a big part of that whole nearshoring story.
Yeah, look, I mean, that explains why you're doing something like that, right? That cross-border traffic is going to continue to grow. You want to control that origination. They highlighted that it is part of that strategy. We'll certainly hear more about that when they report in about 20 minutes and then in their call in a couple hours. But it's certainly the story they talk about, but they've also talked about getting rid of underperforming assets. We saw them sell UPS Freight. I think at the bottom of the market, that has proven very valuable for TFI, which acquired it. They just sold Coyote, as you mentioned, to RXO. We look at RXO stock, that's gone up over 40% since they've made that acquisition. So UPS, let's see if they've made quality acquisitions at the right time. This seems to be one that can aid your growth, especially on the cross-border. But let's hear from them and see how it goes.